Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence. He joins us for Cybersecurity Awareness Month to discuss performance in the NQCYBR index and cybersecurity spending outlook. Mark, it's great to see you as always. Welcome back to Trade Talks, and tell us a bit about this index and how its performance looks.
Thank you so much, Jill. Great to be with you. And yes, October is National Cybersecurity Awareness Month. It is why we are covering all of our cybersecurity indexes here at Nasdaq. NQCYBR is the Nasdaq CTA Cybersecurity Index, CTA, the Consumer Technology Association, being our sort of index contributor research partner on this. They do a fantastic job of monitoring the universe of eligible companies that have significant revenue exposure to cybersecurity as a business. And so what you find with this product is a really nice mix of sort of your heavy-hitting, pure-play cybersecurity companies, names like CrowdStrike and Fortinet that come to mind immediately. And then also names that, maybe cyber is not the biggest piece of their business, like Cisco, for example, but is still a major part of their business. And they, in turn, are a major player for the industry. So what I wanted to start out with here is just a look at performance. This is last 3 years as of the end of the last quarter, September 30th. And I'm showing NQCYBR here. This is all net total return performance in purple. NQCYBR versus 3 of the main competitor products. So iBugT is tracked by the Global X Cybersecurity ETF. Then you've got PCyber is tracked by the ETFMG Prime Cybersecurity ETF, ticker HACK. And then NYFSSECN is tracked by the iShares Cybersecurity and Tech ETF. That's iHack. And it's really interesting to me how close the other 3 competitors are in terms of returns here over the last 3 years. And then, of course, NQCYBR kind of stands alone above these. And in particular, I would note that it has decoupled over the past year or so is when you've seen a lot of the outperformance to get it up to a 34% trailing 3-year return. That's 14 percentage points better than the second place index that is tracked by that iHack ETF from iShares. So really, I think speaks to the merits of the methodology that we have for this index and bringing in CTA to take a very considered approach into how you select companies for inclusion in the index, combining some of that pure play as well as some of those diversified players here.
And Mark, what about a quick update on valuations and fundamentals?
Yeah, so valuations, the story obviously in 2022, we're almost getting to the end of 2023, hard to believe, but 2022 was a really rough year for a lot of the tech sector, and cybersecurity was no exception to that. And so when you look at sort of where we were, this is from a couple months ago, midsummer, in terms of price to earnings, price to book, enterprise value to sales, or EV to EBITDA, any of these 4 valuation measures, this index was trading anywhere from 20 to 30% cheaper versus its peaks. Either at kind of year-end 2020 or year-end 2021, depending on which measure you look at. So, substantial discount in terms of the valuation that mostly was experienced in those drawdowns of 2022 when the industry kept growing. This is an extremely stable industry in terms of its growth rates, right around 10% year in and year out. There's a massive total addressable market of anywhere from 1.5 to 2 trillion, which, we are about 10% penetrated these days. We're a little under 200 billion in total global cybersecurity spend. So it's a long runway for this industry over the next decade plus to grow into that total addressable market. And, the ongoing security incidents in the US and around the world, I think, support that case of, that stable kind of year in and year out low double-digit growth that we're seeing. And the valuations jump around, right, depending on what's happening with the market and the tech sector generally. So it's been a great time, I think, to look at this index, this industry from a valuation perspective and say, look, there hasn't been a recession here in terms of spending cuts. There's just been a recessionary sort of contraction in valuation. which in a lot of analysts' opinion is really not justified by what's happening at the fundamental level.
And finally, Mark, let's take a look at some survey data around why cybersecurity continues to be a defensive play, to your point earlier, in terms of how the spending outlook looks stable.
Yeah, so I mean, this is a survey that I look at every quarter at this point. It's run by Morgan Stanley. It surveys around 100 chief information security officers of major corporations in the US across about 40 different areas of IT spending, and it asks them two very simple questions. Which areas of spending are predicted to have the largest increase over the next year, and which projects are most and least likely to get cut? And if you zoom in and you can squint through this list of 40 areas of spending that they track, security software is at the top of both, meaning that out of all these different areas of spending, they get the highest number of responses quarter after quarter for folks saying, okay, security spending is going to have the largest spend increase looking forward versus all these other areas. And it is also the least likely by far area to get cut. There's not a single respondent here that says security software is the most likely area to get cut looking forward. There is no other area of IT spending out of all 40 areas where no one else in that particular area has said, we think it's most likely to get cut. In other words, security software kind of stands alone in terms of not just people saying, we're going to invest more, we're going to keep spending more year in and year out, but it also stands alone in those saying, we're never going to cut it because it is so mission critical to running a large organization these days with all the different cyber threats that are there. So that alone, I think, speaks to why we think of it as such a defensive area within tech. It really is more of like almost like a utilities play. It's a modern day digital utility. You cannot run daily life in a modern digitized society, let alone a large organization, without robust cybersecurity. And that's why we really like tracking this industry. And we think NQCYBR is a great way to do it.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.